Hi everybody, today I'm going to provide you my portfolio update as of end of July and also talk about the rebalancing I have done on my unit trust. I'll share with you what are the funds that I have removed and what are the funds that I have added in. First, now let's look at the stock portfolio. With the current value now is 129,000, and for the month of July, I've actually increased holding on two counter. One is Nike and the other one is TLT, which is the iShare 200 Plus Treasury Bond ETFs. For the Singapore stocks, currently I have 11 counters, and with a total portfolio weightage of 30.78%, and there is none of the Singapore counter have more than 4% weightage, with OCBC currently have the lowest weightage at 1.14%. I'll be looking for opportunity to increase the weightage for the banks. For the US side, we have also 11 counter, and the weightage is higher than the Singapore side, which currently have 35.61%. Nike have the highest weightage, which is 4.61%. However, none of the counter have more than 5% weightage, which currently is the cap that imposed on all the counters. As at end of July, I also have 33.59% of cash, planning to invest when there's opportunity arise. This is the stock portfolio performance as of end of July. As we can see from the chart that you have maintained positive over the invested capital since October 2023, and the gap have been actually widened, means that the profit actually have increased. As for the dividend collected, it have been steadily increasing since 2022. I plan to add more dividend counters, especially on the Singapore stocks, so that to further enhance the dividend payout for this portfolio. Next, let's look at the unit trust portfolio. The portfolio value as of end of July is approaching 60,000. Since May to July, actually, I have made a rebalancing on this portfolio. And what are the key changes? The first changes is that I have made changes to the global fund by actually replacing JP Morgan Global Dividend Fund with Allianz Vesta Global Equity Funds. Why I do the replacement is that I want to have a more aggressive approach on the equity side towards the end of the year, and this is why I removed JP Morgan Global Dividend Fund, which is more defensive in nature, to a more aggressive fund, which is the Allianz Vesta Global Equity. This is extracted from the fund fact sheet. From here, we can see that actually Allianz have been able to achieve a double-digit return over a 3-year, 5-year, and since inception performance. Although you can see that the 5-year is performed less than the benchmark and the since inception is less than the benchmark. However, it achieved a positive sub-ratio, which is a better risk-adjusted return. And this is the current holding of the fund as of July. More than 1/4 weightage on the IT sector. And as a global fund, usually more than 50% of their investment will be on the US market. And same for Allianz, about 75% of the investment is on the US market. By looking at the top 10 holding, we can see that actually it's mainly the big names on their holdings, and the top 10 holding comprise about 26.5% of the portfolio. And for this, the top 10 holding weightage actually is lesser than the other global equity fund I have, with the JP Morgan Global Select Equity Fund, where the top 10 holding weightage is about close to 50% of the portfolio. And another adjustment I have done in around June period is I have actually removed Philip money market funds and replaced it with Nikko AM short-term bond fund. Interest rate expected to cut in the foreseeable futures, and money market fund returns will drop when there's an interest rate cut. However, for bond fund perspective, you see a bond price will move in the opposite directions compared to interest rate cut, although the bond yield will come down. Ultimately, I will still feel that a bond fund will able to outperform the money market fund when during the interest rate cut period. And this is why I shift over to Nikko AM short-term bond fund, which is a low risk bond fund. For this fund, the objective is mainly just to seek preservation of capital rather than growth, and thus you will see that the return to some of you may not be really fantastic over the long term, as this fund is more like a fund to cushion the portfolio volatility, and it can also be that I temporarily park the fund to wait for opportunity, and I can shift it to a higher risk funds when the opportunity arises. And thus, Nikko AM short-term bond fund is sometimes we always call it as a parking fund, where you use it to park our fund there while waiting for investment opportunities. And this is the allocation of the fund, where 33.5% are in the banks, and this is the country allocations. No country have more than 25% allocation, and these are the top 10 holding, where we can see that the top 10 holding weightage have less than 25% of the total portfolios. And this is the final allocation of the fund. And one thing to take note that besides replacing JP Morgan Global Dividend Fund with RM Best Star and also Philip Money Market Fund with Nikko AM Shenton Short-Term Bond Fund, I actually have also reduced the US weightage from 20% to 15% and increased the weightage of Pinko GIS fund from 10% to 15%, as I start to take some profit from the US market and put it into the bond fund. And currently, my bond holding is about 30% and my equity holding is 70%. I'll plan to make the allocation back to 80% equity and 20% bond when there is an opportunity arise for me to make that move. With this allocation, the portfolio volatility is 11.68%, and with a 3-year annualized return of 5.25%. Do take note that these are based on past performance and it doesn't guarantee future returns. And when looking at longer term for 5 years, which is about 8.9%, and this is my target of achieving high single-digit return over the long term for a unit trust portfolio. But nevertheless, when there's a market downturn, it will still suffer a double-digit drawdown, where the 3-year maximum drawdown is 16.9%. From this portfolio, you can see that I have actually 2 global funds and 2 Asia funds. Why I do 2 global fund and 2 Asia fund is that it's more of to counterbalance one another, and also because the investment style of the fund manager may be a bit different. Thus, you will actually able to compensate one another, as no fund can constantly be the best performer consistently, and thus I need 2 funds to balance them. For example, FSA Dividend Advantage was actually a very good fund. However, for last year, it didn't really perform well, and you can see that it gave a negative return of 4.42 compared to East Spring Asia Low Volatility Fund. In fact, last year it performed a return of 18.56%, a 1-year return of 18.56%, and with a much lower volatility. So at this current market juncture where Asia market is a bit volatile, I prefer to have a low volatility fund in the portfolio to cushion on that. But if Asian market is on a rally and a bull run, maybe this low volatility fund may not perform well, and I may need to make adjustment along the way. And this is my final portfolio holding as of 31st of July. As you can see, the bond is below, is comprised about 30%, and the equity current holding is 70%. The portfolio have turned positive since November 2023, after I actually have made a rebalancing and actually removed the China equity funds, and the stock portfolio has started to turn positive after November 2023, where I actually make a rebalance by removing the China fund and focus more towards a global equity and US market, and it actually pay off, and the return have actually improved quite significantly. That's all I have to share with you for this portfolio update. And if you feel that this has benefited you, do remember to like, comment, and also share this video. I shall see you in my next video. Bye-bye.